Hi believers, welcome to Waya's monthly bite. This is Shubham from Waya team. Today we'll discuss the impact of Lok Sabha elections exit polls and where can market head along with the key sectors and indices to focus. Let's understand what will be the market reacting on tomorrow's opening. So, as we all know, exit polls are here and most exit poll predict over 350 seats for BJP led NDA. This is a clear win for BJP and they are in an easy position to form the government now. Another report which shows that India's Q4 GDP growth came in at 7.8% and 8.2% for whole FY24, whole year FY24. PM Modi has mentioned that this is just a trailer of things to come and hence we can expect more faster growth rate ahead. GST collection came in at 1.73 lakh crore in May. This number has been consistently above 1.5 lakh crore and this time also it rose to 10% for year on year. Foreign investors, which were like continuously shorting Indian stocks and the short levels are at record highs, they need to wind up the short position and they need to start buying now. Dow Jones on Friday gave a very strong closing for the US stocks. So global market also looks good. All these factors suggest that market will open on a strong gap up and we can see a 500 to 1000 point rally in Nifty in the coming week, depending on the actual results on 4th June. Let us check how important indices are placed. Let us start with the chart of Nifty 50. It is running in a upward trending channel pattern and it is trying to take support at 22,500 levels. Now tomorrow's move alone can take it to the levels of 22,800 or 22,900 or maybe 23,000, and it has further potential to rise up till 23,500 depending upon the actual results. Let's analyze the chart of Bank Nifty. Bank Nifty since the start of January 24 has been consolidating around the levels of 48,500, 48,000 levels, and it has been not able to sustain the breakout above 50,000 level. Now this time if FIIs turn net buyer, because banking stocks are most FIIs favorite and they turn buyers in Indian stocks due to the results of election, the bank nifty can give a clear breakout and it can head to 51,000 levels. Let us now see the charts of mid cap index and small cap index. Mid cap index did had a small correction last week, but it remains in a long term uptrend. We believe profit booking was due to election outcome nervousness, and mid cap index is now ready to make new life highs. It is also taking good support at 51,500 levels, and I think it's placed to make the new high levels above 53,000. Similarly, coming to Nifty Small Cap Index, it also had corrected due to election volatility, but now reversing. And it can reach to all-time high levels of 17,150 and maybe above. Most of the stocks in the market are from mid and small cap space except Nifty 50 stocks, and hence it is important to keep track of these charts. At Vaya, we have around 200 stocks in our coverage from mid and small cap, which we are repeatedly recommending to our subscribers. Most of the stocks have reported very good results of quarter 4 and are set to rise going ahead. Let us now see the chart of India VIX. India VIX, which measures the volatility of the index, shot up from level of 11 to level of 24 in last 3-4 weeks. This was all due to the uncertainty related to the election outcomes, and as the exit polls are now out and most of them are predicting like the BJP is coming with majority, we can now expect the volatility to fall and hence India VIX will start coming down. Before we discuss various sector charts, let's discuss what happened to Nifty post 2014 and 2019 election. After the results of 2014 election were announced, Nifty rose from 7,000 levels to 9,000 levels in next 8 months. That's 30% rally. Similarly, markets rose from 11,000 to 12,000 levels post 2019 election results. It is clear that market likes government with clear majority. This time also it is expected that Nifty will continue to scale new highs. Some consolidation may happen due to global events like US election upcoming and wars like situation in Middle East, but that may be a small time-wise correction. Let us now discuss sectors that will benefit immensely from this election results. Let's see the chart of infrastructure index. It consists of companies from cement, power, and oil and gas industries. Index is taking support at 8600 levels and can easily rally up till 8900 levels, considering the high focus of government on infrastructure space. This government has been consistently reviving a lot of PSUs, which are nothing but state owned banks, shipping companies, and energy companies. Nifty PSE index may now shoot up to all time high levels. Keep eye on all the government companies. Coming to the chart of Nifty Auto Index. Auto companies have been reporting good set of monthly data. Themes like electric vehicle, premiumization of cars, e-buses, etc. are going to show good traction and auto index may continue to rise. Auto index is also a leading indicator of growth in economy and since we have seen the economy growth numbers, GDP growth numbers are coming very good, this index can continue to scale to new highs. Coming to the chart of Nifty Realty Index, Nifty Realty Index continues to scale new highs as all realty companies reports good sales data and number of housing units sold. Keep eyes on DLF and Oberoi kind of stocks. Coming to the next chart of FMCG index, FMCG has been consolidating from last 4 5 months, but this time there are reports from companies like Marico and Britannia that the rural demand is picking up. Hence, index may not go below 53,000 level. In fact, it might give a breakout of 58,000 levels once the trends in the rural demand picking up are established. Let us now discuss the charts of sectors which are dependent on global economy. Let us first start with Nifty IT. All is not well with IT stocks. Infosys and TCS have reduced their guidance, and hence we need to wait till next quarter results and commentary to understand what's going on in the IT. Charts are breaking down, and we should avoid IT index for now. It is unlikely that IT stocks will give us strong returns going ahead. Coming to the chart of metal index, globally metal prices of zinc, copper, silver, etc. are rising due to increased demand in manufacturing activity, and even Chinese demand is also increasing, and hence the metal stocks are rising. We should continue to focus on stocks like Tata Steel, Hindustan Copper, etc. Let us now discuss the chart of Nifty Pharma. Pharma stocks are consolidating in range bound levels. There are reports of major drug shortages in US and Indian pharma companies can be major beneficiary as they export medicines to US. All companies have so far reported good results in Q4. Hence we expect pharma index to give breakout on the upside once the consolidation is over. On the chart also we can see a pattern of pole and flag wherein flag pattern breakout can happen at 18,200 levels. We did mention last week about Adani Enterprises and we have saw that Adani stocks were in focus since last week. Well, some of the Adani companies can give a massive upsides. We have three interesting names here. Adani Enterprises can scale to new highs of 4,000 levels and above. Adani Power can rise to another 25% on a strong technical pattern. Adani Ports can show another 7 to 8% move and can reach to a price target of 1550 rupees. Adani Port is consistently reporting good set of data on cargo volume handled every month. So we should keep eye on these following Adani stocks. Concluding our analysis, we believe portfolio should be aligned to sectors having strategic focus of government. Government's regulatory push and support can result in massive revenue potential and profit potential for the companies in infra, defense, railway, power, and capital goods sectors. We also believe long-term bull market to remain intact in India. Election worries seems to be now behind and markets will return to normalcy, focus on earnings and valuations. Policy stability will keep sectors like defense, railways, infra, power, aviation, etc. in focus. India to still remain fastest growing major economy, hence it will attract global capital along with strong domestic and retail flows. If FIIs turn bullish from here, banking, IT and FMCG index may also start outperforming. At Vaya, our stance is bullish considering all the data coming from economy and good quarter 4 earning season, which has ended on a positive note. Where do we see the key risk? Geopolitical tensions in Middle East and upcoming US elections may create some volatility, which will also offer great entry points in quality stocks. We believe Indian GDP is set to rise from 3.7 trillion in FY24 to 6.5 trillion in FY29. FY29 is the year when the third term of this government will end. We can see Nifty rising from current levels of 22,500 to 40,000 levels by FY29. That's all for today's. Thank you.